Welcome to the StockMinter.com studios here in the beautiful Black Hills, South Dakota. I'm your stock minter, Brian Johnson. And the markets, based on the Fed, decided to run up. Not a surprise in the least bit. If you've been following along, if you're a subscriber, you know what the play was for today. And there was no surprise. Bernanke, what was he going to do? Come out and say, yeah, we're raising interest rates? No, that ain't going to happen quite yet. They have no interest in doing that right now, and they know what it'll do to the market. So, a bunch of non-news started up to begin the day, then down, then back up again after the announcement, and strong at the very, very end of the day. I was get a little bit spooked, to be honest, with those really, really hard pushes at the end of the day when we're already so extended. So I'm curious to see if this is going to stick tomorrow, coming into tomorrow's trading. But as it appears right now, it looks like a very strong, very good, potentially here, wave 3. And if that's the case, it is going to continue up, guys, and it is going to continue up for a while. I'd recommend that if we continue with strong news tomorrow and we continue with strong earnings, that if you're long, you stay long. Could be a while here. Don't get spooked out by we're up too far. It's time to turn around. Those of you that are trying to call tops and bottoms are going to get your hand slapped more often than not. And that is by far the single biggest weakness I find in my students and in myself. When I first started trading, that was my biggest weakness. That was why I lost the money I did. It's because I just thought, the market's up too far, it's got to go down, or it's down too far, it's got to go up. And I'd start playing those counter trend moves and wouldn't have a stop in and feel, oh, tomorrow it'll change. Oh, tomorrow it'll change. And it never did. It just bled me to death. Don't get caught up in that. There is no such thing as up too far or down too far. Erase that from your trading vocabulary. It's a bad, bad practice. Okay, anyway, moving on to the markets. We had our breaks back above this 12,450 and 12,500 here even last week, and you can see the strength we've seen since then. Kind of danced around a little bit, but two very good, strong days of movement to the upside once we broke above these levels. So I hope you've been following along, because there has been money to be made. We broke these levels up here at the 12,500. That was a entry. 12,400, 12,450, all entries here if you've been following along. You can see they've worked out beautifully for us right now. We are doing extremely well again this week on the subscribers newsletter on some of our picks, especially in gold. We're not doing anything with oil right now, but I do have entries set for my subscribers on when to get in on that. But gold has been money for us the last few weeks. We've done very well with that, along with some individual stock plays. And the indices are now helping those in a big way. Move up, move sideways, move up. How many times have I told you guys that in the past? Tons. And it's the same scenario here. Lather, rinse, repeat. So Dow is now up, down, and back up again. This is going to completely now eliminate all of this stupid talk about non-confirmation in the markets that I know there are some pundits out there that have been saying that, we're going down, we're going down. Oh, hey, look, such and such made a new high, but the S&P and the NASDAQ have not. So, that's really bearish. No, it's not. No, it's not. Don't get wrapped up in that. If you're familiar with what you're doing, you'll know that that's not the case. Don't get sucked into that kind of thinking. It's a terrible way to think. So, as you can see now, all of that is off the table as we have, once again, all the indices have now made new highs. They moved up, they pulled back. My call for the subscribers was, are we going to, it was just a matter of when we were going to make new highs, not if. So were we going to move up and make new highs right away, or were we going to move up, pull back, and then make new highs? Well, for the SPX and the NASDAQ, it was move up, pull back, and then make new highs, whereas the Dow barely made new highs, then pulled back. Now is, of course, on to new highs again here. This was all shown to us by some other stuff that we were following, but a very clear picture for me to see that we were going to make new highs, and we did. Doing very well here on our trades to the long side, even if you've been following along on a daily. Absolutely entries, good entries, and good opportunities to get yourself in here and make a little bit of money, even after the strong run today. The NDX on a 60-minute here looking very, very strong. Go right to a daily and you can see, look at this thing run. I love the NASDAQ long. Have I said that about 1,000 times before? I think I have. Not a big fan of the NASDAQ short. Man, I love this thing long. When it gets going, it is so strong. And this is the NDX 100, which is the 100 strongest stocks in the NASDAQ, which I really love to follow. So here we had that pullback. We had this big dip right here, but look at how well that hammer candle played out. Got good confirmation the next day, and then it was game on from that point forward. This whole move was bullish. Just very, very bullish. Love these type of moves. When you recognize them, you just know them. And well, I'll tell you what, it turned out very, very well. So Nasdaq once again in the driver's seat, looking very strong, closing up and above its highs, catching up to the rest of the indices. Where for a while it was really weak. It took it a long time to get going. However, want to draw a little line with me? Can you see it? Do you notice it? Could be that inverse head and shoulders. Oh yeah, baby. Well, if that's the case, we got a long ways to go yet before the Nasdaq tops out. So we'll see where this thing ends up. Watch for a pullback. If you're not in it long right now, I'd caution you from just dumping your stuff long right now. We're due for a pullback, maybe after that pullback, but I don't know when that'll be. That pullback might be another week away. Who knows? If this is a wave 3, these things are just relentless. Just relentless from an Elliott wave standpoint. From a weekly 2, getting up and over these highs, this is what I want to see to hold by the end of the week. Let's see if this thing will actually hold these highs by the end of the week, or if it comes back to retest that 2400 over the next couple days. SPX 60 looking very strong here as well, pushing straight up well above a lot of the moving averages. Everything looking very bullish in through here, and the chart just is what it is. Got to follow it. So here was that consolidation we talked about. There was the push to new highs. We got it yesterday, confirmation today. Good volume on both days. The bulls are back in charge. And yes, I'm sure you've looked at or talked or had somebody tell you about the inverse head and shoulders here on the SPX. If you haven't, then there you have it. Here it is. Left shoulder, head, and right shoulder. Boom. There's your breakout. Looking very, very pretty. Very strong right now. VIX daily chart here down as well. Back into that 15 range. This makes good trading, good opportunities in most cases for you options traders. So I'd be watching the options markets very, very hard the next few days. This has been where the market has liked to spike a little bit in the VIX. Right down here around this 15 area. 14, kind of an anomaly, falling out of where we normally sit. Going all the way back to October, we had not been into really the low 14s. Had a couple days here, and now we're kind of back up. So we'll watch to see if that VIX will spike a little bit. Point being, it's low. Nobody cares. Nobody's feeling nervous at all about the markets here. They don't think there's any major drop coming, and it's very, very evident as we can see by the VIX. Apple 60-minute, nice move up today. Really didn't go anywhere. It was down actually. Apple's a monster all to itself. If you follow Apple, you know exactly what I'm talking about. Markets climb. Nasdaq's killing it today, up almost 0.8% on the composite overall. The Nasdaq 100's been screaming upwards. And Apple's down today, not following along at all. Very common for Apple to do that. It has a mind of its own. Here's where we're at, guys, very simply. 347 and 355. That's really where I'm going to put our range. Okay, so we're sitting in an $8 range right here. Feel free to try to trade it if you want to. For myself, in the more conservative manner, I'm going to wait for breaks below here and above here before I start looking for trades on Apple. But does this look familiar at all? This is a bull flag, guys. Right now, this is bullish. Now, it could continue to creep down, much as what we saw the NASDAQ do. Here's the NDX. Oops, wrong. Yeah, no, right here. See this little move right here? Okay. Slide out about, take these and just wipe out everything to the right. And this is what, the chart ultimately adds up to, is just a bull flag. It took it a while to kind of finish what it was going to do. Apple could be in the same boat. But it is a bull flag for the time being. I would not in any way be surprised to see Apple go through what we saw the NDX chart do, and that's fall backwards a few more days maybe, and even come down and touch this 345-ish area. But man, I'll tell you what, I'll be looking for potential long entries. Speculative, mind you. Speculative for me to take a long at 345, but I'm going to drop my position size and give that a shot, because I love this for lower support right here. I love it a lot. So look for this thing to maybe pull back. This is all a bull flag right now. And if Apple's coiling up to do what the NASDAQ did, and I fully expect it could, it has not made new highs yet. Guess what? Apple bulls, you could be in for quite a ride. And it could happen in quite a brisk manner. So will it happen? I don't know. But I'll tell you what, I like what I'm seeing so far. I'll follow that with Apple. Weekly as well, just sitting around. Holding the 20-week moving average is the most important part here. FAS saw a nice push up, getting up and above this $30 mark. If we move over to the daily really quick, I'm going to show you this. We're right here at the 50-day moving average. If you want to push or take along above that $30.50 area, sure. But $30.75 or so is going to be overhead resistance, so you'll want to be careful with that trade. We are up here a little bit. It isn't all that. I mean, it isn't real extended. But if I ran a line top down, I would say that we're going to hit overhead resistance right around that $31 mark. Right behind this line, and $31 is going to be pretty darn close to the overhead resistance level. So if you want long entries, it's above $30.50. Short is below 29 before you start looking at that. FAZ then, of course, falling down. And look at this. How perfect did this work out? Down, 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 straight up right into overhead resistance as marked by my line that I have drawn here. And it held beautifully. Beautifully. So this was a really good run to the downside. I really didn't want to get long in a major way until we got back up above 44, down in this area above 42, and we have not done that yet. So below these moving averages was your entry to the short side. If you want to stick with that, you could see it back into 38.50-ish or so. This thing manages to break 37.70, 37.60 or so. Wow. Who knows where it's going to end up. The blue line, maybe, I guess. That would be my first guess on this one. But right now, in a pretty steep pullback right here, we'll see if this thing can recover. The bulls will absolutely want to try to, now that they lost it today, they'll want to try to get these moving averages back. No question about it. So we'll look to see if they can get that back. All right, that'll do it for today's video. Sign up for my newsletter if you want more information on making money during the course of a week. $28 a month. That's $1 a day. Less than $1 a day in most cases, unless it's February. $1 a day. Give it a whirl. Don't have to stick with it. And, of course, I also have the mentoring course. That is, boy, I'll tell you what, if you like my vids, if you're getting information out of my vids, tip of the iceberg here. The mentoring course is all-inclusive. It's everything I basically know about trading, and I'm with you forever. Once you pay for the course, you can ask me questions for the rest of your life, and I'll answer them for you. That's why I'm a mentor and not just an educator. It's a huge difference. So anyway, check out the mentoring course. If this is something that you love to do, if you have a real passion for it and you want to continue with it, but you just can't seem to put all the puzzle pieces together and be consistently profitable, if it's something you want to do full time, mentoring is a must, period. I'll just be flat out plain with you guys. Mentoring is a must if you want to do this full time. Got to have the education. If you just want to make a little money here and there, mentoring is a huge asset to you in that case. And definitely put you on the right track to more consistent profits in the markets. Okay, so you guys again, if not tomorrow, again on Friday. Bye.